From Impact Alpha, it's This Week in Impact, where we bring you some of the most interesting impact investing and sustainable finance stories of the week. It's Friday, March 7th. I'm Brian Walsh, and this week I'm joined by Impact Alpha emerging markets reporter Lucy Ngige. We'll discuss the current state of the small and medium enterprise ecosystem in Africa, based on what Lucy has been hearing from LPs, GPs, and entrepreneurs working in the space. Plus, we'll review a variety of recent deals that demonstrate the resilience of emerging market investments in both Africa and Latin America, despite the U.S. government's retrenchment in foreign aid and investment. That's all coming up on This Week in Impact. Hi, Lucy. Welcome to the podcast.
Hi, Brian. I'm so happy to be here.
Now, this is your Impact Alpha podcast debut, and you're joining us from Nairobi, Kenya, where you cover emerging markets for Impact Alpha. Tell us a bit about your beat.
Yeah, so I cover emerging markets, Africa, Asia, and Latin America. And a lot of my work revolves around, highlighting trends, highlighting innovative fundraising strategies that I'm seeing, and, highlighting the key players and transformative projects that I'm seeing that are sort of helping to drive economic growth and social change in these emerging economies.
All right, well, excited to dig into this with you. Now, you were recently had company in town from the Impact Alpha team. Both Jessica Pothering and David Bank were there for recent reporting trips, including covering the Collaborative for Frontier Finance conference. So can you tell us about the Collaborative for Frontier Finance and the work they do and what you heard from participants there?
Sure. So the Collaborative for Frontier Finance is a collection of LPs, GPs, and entrepreneurs that are coming together to sort of find ways on how we can mobilize capital for SME funds in Africa, primarily. So CFF is an annual convening, and every year, we have institutional investors joining. We have people from various development agencies. Sometimes we have philanthropic financiers. And the main point is, having them in the room and having the financiers and the people receiving the finance, discussing on how we can better open the taps for financing.
What was the vibe at this year's Collaborative for Frontier Finance gathering?
Yeah, I mean, you'd think that, with recent shifts in financing, specifically the USAID funding freeze, and European countries sort of diverting their resources to prioritize their defense. I mean, you'd think that the mood on the ground would be jaded, but there's a renewed hope and there's a renewed optimism that I was getting from the entrepreneurs and the local SME financiers, which I think speaks to the resilience of the emerging markets that we always speak about.
So why this resilience?
For a long time, we've always highlighted the need for local resources to support local ecosystems. And I feel like, with the recent funding freeze from the USAID, it's been a sort of wake-up call to local financiers to, accelerate their approaches to unlocking more financing for the ecosystems that they serve.
When it comes to local financing for local solutions, who is stepping up in a leadership role?
I'm happy you brought that up because I just covered a report by INP, which is an impact investor that's focused on sub-Saharan African SMEs. And this report highlighted that we're starting to see a sort of shift in fund leadership in Africa. We're starting to see more African general partners, and we're starting to see more funds raising capital from African public and private investors. So I would say that, over the last 10 years, there has been a shift in who is making these deals and who is also at the helm of leadership for these SME funds. And I think the implication is that we're starting to see more locally tailored solutions for SMEs from the Africans who sort of understand what it's like to operate in Africa.
And so, what makes local investors in Africa most excited right now? What's the investment case?
I think speaking to investors, one thing that really excites them is the age of the population in Africa. We're seeing various reports come out saying that, by 2050, the average age in Africa will be 25 and below. And I think most investors are excited about that youth statistic because it implies that, Africa will be the only continent, essentially, that will be able to carry industries, will be able to carry manufacturing. And, my prediction is that, we'll start to see a lot more processing facilities, manufacturing facilities, moving their bases to the continent because that's where the general population will be able to sustain the manpower that's sort of needed.
All right. So when we talk about the SME ecosystem, that small and medium-sized enterprise, let's just define what that means. What is a small and medium-sized enterprise as opposed to a large enterprise?
Just as you've said it, SME stands for small and medium enterprises, and they are actually responsible for around 80% of employment in Africa. I mean, large organizations are not able to absorb the number of youth who are coming out of universities to join the workforce. And so we have a secondary entrepreneurship ecosystem where the SMEs fit in and they're able to absorb, most of the young people who are looking for work and, drive socioeconomic growth and, offer job creation year in, year out.
Now, I know you attended another recent investor forum in Africa, the Sandkalp Forum. Tell us about that.
I mean, given recent global happenings, most of the conversations at these convenings that I've been attending are sort of pointing towards, encouraging entrepreneurs and SME funds to diversify their sources of funding. So I'm seeing a lot more focus on pension funds. I'm seeing a lot more focus on philanthropic capital providers and commercial investors. So essentially, I'm hearing that SME funds and entrepreneurs need to go back to the drawing board and sort of reevaluate the sort of financiers that they've been approaching. So it's time to consider more corporate financiers and look, towards or encourage more pension funds, to sort of substantially invest on the continent and support the continent's SME funds.
And so that's getting pension funds that are African-based pension funds to do African-based investment in SME funds. Is that right?
Exactly. I mean, there are some markets where this is already happening. In South Africa, we see like the pension fund has been very active in supporting local funds, supporting renewable energy projects, and supporting projects that sort of help spur job creation in the country. And this hasn't been replicated so much when you look at other corners of the continent. And so the onus is on pension funds, that are actually sitting in Africa. They do have a substantial amount of funds, but they haven't really been actively supporting funds in their region. So I'll take East Africa, for instance, which is where I'm based. I can say the Ugandan pension fund is called NSSF, is really stepping up. I mean, we spoke to some of their representatives who shared that they're actually working with MasterCard Foundation to sort of help seed an SME fund, which they want to be listed in one of the East African stock exchanges. And the reason they're doing this is to help to support these SME funds with the hope that, supporting these SME funds will indirectly support job creation, because this is what they need. More people are retiring, and we need more people to come into these pension funds. So if pension funds don't actually help, create job creation, then essentially in 10 years, this pension funds will be failing. So this is, one of the key motivations for these funds, to consider how they can help spur economic growth within the regions that they operate in.
So this emphasis on African pension funds focusing on African investments, does that mean that previously they were looking for returns outside of Africa, and now it's about pivoting back to their home continent?
So that's one half of the equation. The other half is that pension funds have, always mostly played it safe when it comes to investing. So you'll find a lot of pension funds prefer to invest in government bonds or treasury bills, which, most of the time have like a guaranteed return. And local SME funds weren't necessarily a priority for them. But right now, with the low employment rates in Africa, it actually threatens the existence of African pension funds. So I believe this is why we're starting to see more focus on these local SME funds, because they're sort of one of the ways in which we can actually direct pension fund resources to then create a sort of job creation cycle.
So it's not just the investment case for these pension funds based in Africa to invest in African SME funds, but it's also the kind of existential question about if they don't provide the funding, then who will, especially with the cutback in foreign aid from the U.S. government. And so they need to, for their own long-term survival, need to invest in the local economy and local job creation.
Yes, exactly. I think it's all about survival. And as I had mentioned, we have so many youth coming out of universities, qualified youth, hardworking youth, very ambitious and driven, but the job sector is not really able to absorb all of them. And so having a lot of unemployed youth, in the next 20 years is not really beneficial to these pension funds. So I feel like this is one of the reasons why they're starting to consider who they can support on the continent, to drive job creation.
All right. Well, Lucy, I look forward to reading about your coverage of the Collaborative for Frontier Finance and SandCalp Investor Conference in the coming days on ImpactAlpha.com. But for now, let's take a quick break. And when we come back, we will dig into some of the recent deals that you've been covering in this space.
Maybe it's a story in the brief, or our monthly Agents of Impact calls, or an exchange in one of our subscribers' Slack channels. Impact Alpha is all things impact. Hi, I am Slayma Bibel, co-founder and chief operating officer of Impact Alpha. For more news and insights about the world of impact investing, join thousands of others finding alpha and impact. Visit impactalpha.com/subscribe to learn more.
All right, we're back with Impact Alpha Emerging Markets reporter Lucy Ngige. And Lucy, we're going from talking about the overall investment ecosystem in emerging markets to talking about some specific deals. And I understand you have a series of recent deals that you've covered that you want to share with us. Take us through your first deal.
The first deal that I've really found interesting in recent weeks is by JICA, the Japanese aid agency, which actually set aside $1 billion for a fund which will support private sector projects in infrastructure, climate risk mitigation, and poverty alleviation. So what's interesting about this deal also is that the fund will co-invest alongside IDB Invest. And even though the fund has not yet deployed, I mean, it's important to mention that JICA and IDB have actually worked together extensively since 2019. I know the two had made their first joint private sector investment in Abaco, which is a credit union that was launched by Japanese Peruvians to finance small businesses in Peru. The two have also deployed 20 million in Dr. Consulta, which is a medical clinic chain in Brazil that offers healthcare services and insurance to low income Brazilians. So it's important to note that these two have actually been co-investing together for a long time. It's just that now they have this bilateral partnership to set up a private sector fund.
This really is an interesting story, Lucy, because you have two development partners. So you have a Japanese aid agency and the Multilateral Development Bank, the IDB, joining forces, and they've been partnering for many years now on a range of deals, and now they're stepping up to take this to $1 billion fund to invest in it even more. So this is kind of a good example of piloting partnerships and proving out the model, and then writing a bigger check to take it to scale.
Exactly. And it also essentially speaks to what I've been hearing also, that with the US aid, backing out, we'll sort of start seeing more interest and more investment activity from financiers from the East, mainly in Asia. And I think this is just one of the great examples, or one of the investments that we'll start seeing going forth.
All right, so what's another recent deal that you've covered that has caught your interest?
Next up, we have South Africa's Kula, which is an online platform that's essentially connecting smallholder farmers and commercial farmers as well to input suppliers, financiers, and commodity or produce buyers. Kula had raised some financing from PepsiCo's Godiso Development Fund, from South Africa's Absa Bank, from South African impact fund called E Squared, and an agrichemicals company called AECI. And this collection of investors has now re-upped its investment in Kula for its Series A round, investing 6.7 million in this round. So interestingly, Kula is leaving this Series A round open in the hopes of securing some additional 2 or 3 tickets. And it hopes to close this fund at nearly double what it raised. That's like 11 million.
Kula, I understand, raised its seed funding in 2021, but its valuation has increased pretty remarkably since that time. Where is it at now?
So the startup says, its valuation has increased by 10 times since 2021 when it actually secured its seed round.
And what are they planning to do with this Series A funding?
So Kula says it's been able to increase its valuation by 10 times since its seed round in 2021, which is quite impressive for an agri-tech startup in Africa, to be honest. And it's looking to use this funding to expand its team, strengthen its presence in South Africa, and hopefully venture into new markets in Africa and potentially in Latin America.
All right, that's super interesting, Lucy. Now, how about the final deal that recently caught your attention?
The other deal that I really liked was one from Blue Orchard, which is a Switzerland-based impact investor that reached a 100 million final close for its second private equity fund. And the fund essentially invests in companies in emerging markets that are offering climate insurance solutions, mostly for low-income segments in these regions. And, I had been speaking to the team for some time prior to the announcement of their final close. And, they shared that they're starting to see a sort of shift in how investors approach insurance as an asset class. Actually, out of the 100 million, 40% was from private investors. And they also shared that, they were able to secure substantial funding from European insurance firms with broader climate mandates.
Help me understand what climate insurance is exactly and how it plays out in practice.
So climate insurance as an asset class essentially means that, insurance firms are awakening to the substantial loss that companies and individuals are suffering from climate-related disasters. So, we've seen flooding, we've seen hailstorms, we've seen drought, we've seen fires. And so insurance companies are starting to offer products that sort of protect their clients against these climate-related disasters. So let me give an example. Blue Orchard's fund recently invested in a South African insurance company called Naked. And Naked offers coverage for, vehicle damage, household, and electronics damage. And essentially, Blue Orchard funded Naked Insurance so that Naked could start embedding climate insurance options into its existing policies. And what I like about it is that Naked offers solutions for as low as $3 per month, which fits very well into Blue Orchard's mandate for specifically targeting low-income populations.
All right, so help me understand this better. So you have Blue Orchard, which is a Swiss-based private equity fund. It's raised $100 million. Probably 60% of that comes from development finance institutions. 40% comes from private investors that are benefiting from the first loss provisions provided by those development finance institutions. Now this fund is itself investing in local insurance companies that are providing climate risk mitigation insurance policies around the world. Is that correct?
That's exactly right, Brian. And the DFI activity was particularly, significant because they were the ones who were sort of helping to crowd in more private investors because, as we had mentioned, investors were a bit shy, coming in because of the whole climate insurance as an asset class thing. But I think it all worked out well.
So this deal hits a lot of the main themes that ImpactAlpha covers. We have climate risk, we have insurance, reinsurance, we have catalytic capital, we have emerging market deployment. So this is really is kind of like the ImpactAlpha bingo card here. This hits all of those spots.
Truly.
All right. Well, I look forward to, Lucy, continuing to read your coverage of really interesting impact investing deals in the pages of ImpactAlpha. But for now, that's going to do it for this episode of This Week in Impact. Thank you so much, Lucy, for joining.
Thanks for having me, Brian.
This is a great debut and hope to have you back on the podcast very soon. And thank you all for listening. This Week in Impact is a production of ImpactAlpha and part of the ImpactAlpha podcast network. Smart conversations by and for impact investing professionals. For exclusive stories and insights about the world of impact investing and sustainable finance, join thousands of other agents of impact by subscribing. Just go to impactalpha.com/subscribe for full access. Thanks, as always, to our producer extraordinaire, Isaac Silk. For Lucy Ngige, I'm Brian Walsh, and we'll see you next week for more Impact.